adjusting for.
So there are a few trends that I think I would highlight. One,
Morningstar
so far
can help
banks
make quick work.
I'm here with Morningstar fund analyst Adam Fisch to discuss April's performance numbers. Let's start in the U.S. What was the story there this month?
Well, the story was pretty good coming out of the U.S. Consumer spending was up, unemployment was down, and manufacturing was very strong. Now, a big reason for that was the depreciating U.S. dollar against a lot of the world's currencies. So developing countries weren't afraid to import from the U.S. Unfortunately, for a lot of Canadian investors, when they looked at their own investments there, coming back in Canadian dollars, they lost quite a bit of ground.
And the European equity category was by far the best performing. Why was that?
Well, it again comes back to manufacturing. In Europe's case, they're manufacturing exports to China. We saw luxury goods manufacturers like Burberry, Christian Dior, and Louis Vuitton all release earnings, and they all beat analyst expectations. Now, it still remains to be seen whether China's increasing rates in attempts to slow down their economy will have a negative effect on Europe, but at least for now they did very well. As far as Canadian investors go, the same thing that happened in the U.S. happened here, but the opposite. We saw an appreciating euro, and that meant that Canadian investors did very well, so it wasn't surprising to see the European equity category go up over 5% for the month.
Okay, and let's talk about what happened here at home. Most Canadian categories did post small losses. What was the primary driver behind that?
Well, we did see real GDP drop a little bit, so the economy did slow down a bit. A big reason was manufacturing. It's no surprise that the U.S. is our biggest trading partner, and even though that dependency is decreasing a little bit, they're still the primary external driver for us. And when our loonie gets a lot stronger against the greenback, our exports are going to go down. I'd also add that a big reason for the struggling Canadian equity category was RIM. We saw them really struggle this month. They dropped almost 15% right near the end of the month. And given that a lot of Canadian fund managers do hold RIM in their portfolios, that would have weighed on a lot of month-end returns.
To find out more on April's performance numbers, click on the link on the right side of the page.